Boom, there we go. All right, also, there we go. All right, we're live. So welcome back to Dapp University. So just fixed my little issue with sound here. So today we're going to talk about some really good news for crypto on the U.S. infrastructure bill front. We've been covering that topic pretty extensively on this channel on these live streams. Again, we do these live streams every Monday through Friday about 9:30 a.m. Central Time. Just subscribe to the channel, find out about those whenever we go live. And we've been talking about the infrastructure bill. Why that's been such a big deal for crypto. There have been a lot of people worried about the future of crypto in America and across the world based upon this proposed legislation. And we've seen some bad news, come out of this in the past. But today we're going to look actually at some updates that could be good for this as this bill, goes through the process of passing and becoming a law. So before we get into that, if you're new around here, hey, I'm Gregory, and on this channel, I turn you into a blockchain master. So if that's something that you're interested in, then smash that like button down below for the YouTube algorithm and subscribe to this channel. And if you want to learn how to master blockchain step-by-step, start to finish, then head on over to dappuniversity.com/bootcamp to get started today. And last but not least, nothing I'm saying in this video is designed to be financial advice, and there's lots of scammers down in the comment section below. Just ignore them, like I'll never give you my phone number or ask you to invest with me. So we got people jumping in the chat here. We've got Lee, Natasha, Star at 30, Ben, Lee, Beto, Barath, welcome. Trezor, Ada, welcome. So let's go ahead and jump into this. So U.S. infrastructure bill, in case, you weren't following what was happening with this in the United States, I'll give you a quick recap. So I know a lot of people watching this stream aren't in the United States, but about 50% of people who watch this YouTube channel are based in the U.S., so it's important for us for sure. And it really is important for the rest of the world because how this is dealt with in the U.S. is likely to set the tone for many other countries, okay? So basically, the U.S. is going through the process of passing a bill for... It's called an infrastructure bill. And what they're trying to do is basically create a spending package to stimulate the economy, include all this stuff in it. And many times when these bills you go through this process, some stuff gets kind of jammed in there, sometimes last minute, that's not always favorable, right? They'll try to just, cram in an agenda while they're trying to accomplish some bigger initiative. And then these little kind of smaller issues fly under the radar. And crypto was one piece of collateral damage in that, where basically we included some regulations around crypto, basically saying that anybody who is participating in crypto now has to be qualified as a broker because of some vague language in there, or at least could be forced to be considered a broker and comply with some pretty burdensome tax regulations, like issuing 1099s to everybody who they interact with on a blockchain, okay? And effectively, this will make it impossible for many people to actually comply with this because you don't always know who you're interacting with, especially if you're not a broker and there's no reason for you to, collect ID documents or anything like that from people that you interact with. And there'd be no way that you actually could comply with that in many cases. So we saw quite a bit of confusion about this. We saw quite a bit of frustration about this, some fights back and forth as this bill was kind of going through this process. But today we see an update on this, okay? So just also a quick update where this, bill is in progress. Like, bills go through this really specific process where, it starts in one part of the government and then it moves to the next one and then it, ends where it gets signed into law. And there's a lot of back and forth in each process. So we've passed the first step. We're about to go to the second step right now. And they're eyeing trying to get this bill, wrapped up at the beginning of October is the latest update that I've seen. But right now, while they're going through this back and forth of trying to revise this bill, we do see a step in the right direction where we're starting to see, well, my camera didn't work here. Let me just fix it on my screen. Hold on. Sorry about a little blooper reel again for today. Let's just turn the camera on. Boom, there we go. We're starting to see some good news here. So basically, we're bringing up a blockchain regulation certainty act. Okay, and this is actually kind of calling up some old legislation and actually trying to include it into this, where this is not the first time we've ever had to consider this problem in the government before. And so we're actually taking some some thinking on this in the past, some language that really helps clarify what the issue here is and try to getting included into this particular bill, okay? So this is not something that is definitely included in here yet. I'll be very clear about that. But it's good news that we are essentially finding language that is way more suitable for people who are in crypto, and just sort of taking this off the shelf and saying, hey, here, let's use this. Okay, so let's dive into this a little more. So leading advocates for blockchain legislation in Congress have brought back the Blockchain Regulatory Certainty Act in a bid to shore up the rules for blockchain and digital currency firms which do not hold client assets. That's what I was talking about a minute ago. Basically, the bill is trying to classify people as brokers who really aren't brokers. So the bill aims to provide a safe harbor for firms that don't hold assets for their users in order to prevent them from being swept up in legislation that could otherwise see them regulated to the same standards as money service businesses, like cryptocurrency exchanges, for example. So the bill has been brought back with some subtle amendments to previous iterations by Representative Tom Emmer and Representative Darren Soto, after being initially presented at the start of the 2019 session. Okay, so this, like I said, this has been out there for a while. Asked about the announcement, Emmer said certain types of blockchain digital currency sector businesses should not have to register the same way as money service providers because they never hold funds on behalf of their customers. Okay, and this is where it's really important right here, because in some of these, how the language is crafted is this could even potentially apply to people who are developers who are deploying applications on top of the networks, which is concerning for a lot of people watching this channel, who want to become blockchain developers, change their career, build this, world-changing technology. And so what he's saying is certain blockchain developers and service providers, like miners and multi-signature service providers, should not have to register as money transmitters because they never custody customer funds, okay? And that's exactly what we've been saying on this channel. Of course, we talked about even if this does pass, there's still good news for people who want to become blockchain developers because there's definitely ways around this to where you could still have a career and a future in blockchain development, where, you might have another company outside the United States kind of working with you where, you're building it is different from running it. But, that's an FAQ I get a lot. That's why I want to bring it up here. So as the issue has become all the more pertinent in recent months while DeFi has been on the rise. And so that's what it's saying here, and that's what we talked about in some of these updates, is I think this has blown up in a lot of people's faces, and it's forced them to reckon with how far crypto has come in the past few years. I think, a lot of people, in the government didn't realize what a big deal this technology has become recently. And I think a lot of them still have crypto in their minds, if they've ever heard of it before, as sort of like, what it was in 2017, kind of this like really new thing, a lot of scams out there. We weren't really sure what Bitcoin was for, didn't even really have DeFi. And so it was hard for people to take crypto seriously back then. And if they had heard of it before, they probably likely still had, crypto with that status in their mind. So anyways, the issues all become more pertinent in recent months while the rise of decentralized finance. Some members of Congress taking the view that emerging international guidance from the Financial Action Task Force could ultimately see many DeFi operations classified in the same way as money service providers, consequently attracting the same high threshold of regulation, which is not really appropriate for DeFi. So issues are also relevant to discussions around the tax treatment of digital currency businesses, with new rules making their way through the Senate that would require enhanced reporting requirements as the new bipartisan infrastructure bill. So, while the initial efforts to carve out exemptions for some digital currency businesses have failed, there's still wranglings to be had from lawmakers who keep on bringing changes for the benefit of wider blockchain and digital currency sectors. So, the latest steps towards legislation have been supported by blockchain advocate groups, including Chamber of Digital Commerce, Coin Center, and Blockchain Association. So I'm going to paste a link to this article down in the description below or in the chat. So if you want to actually go read it, and I'll also just credit it as the source that I'm using here today, you can definitely go check on that. So just check the live chat replay, and I just dropped it in with the current timestamp of this video. So yeah, this is a big deal. And I would like to see this gain some traction because this is, like I said, this is legislation that already has, or this is basically, this is giving us language that helps clarify, what we can, how we can categorize certain people in crypto, which is the real issue with the bill in the first place. The language that is in the bill is just bad. It's too broad. It catches too many people to where it could be enforced unfavorably. Okay, and so we need better language, and that's a lot of what this is that we have off the shelf that we can just sort of take and adapt for this purpose. And so I would like to see this, go forward if the bill even passes. Now, there's some doubts about the infrastructure bill in the United States, whether it's going to pass. There's quite a bit of mixed perspectives on this. Some people really want it to pass, and then some people think that, some of the proposed items in the tax in the bill, especially around taxes, things like that, increasing, don't look so good for the sitting administration. And, I don't, it's not really trying to turn this into a politics channel, but, we do have a lot of members of Congress up for re-election next year. And, see like approval ratings of the sitting president decline quite a bit in the United States. And, basically, if the infrastructure bill makes all that stuff look worse, then, there could be a chance that, it doesn't pass. So we'll see. If it doesn't pass, then maybe all this is doesn't matter as much as we thought it was going to be in the first place. All right, so let's go ahead and check on the crypto markets here shortly. So we got a couple questions here. Let's see, what do y'all think in the chat down below? Somebody says, how the government is. It's funny how they took crypto as a joke until when they see how much money they make. That's the other thing is, if the part of the infrastructure bill really is to like increase taxes so that we can increase government spending, it's like, and then you try to basically take a lot of crypto, make it impossible for people to participate, and then honestly report their taxes. Well, guess what it's going to do? It's going to push a lot of people offshore. It's going to push them underground into black markets. And then you're not going to capture that tax revenue like you could if you let crypto just stay here. And, I'm talking about crypto jobs. If you want to push crypto jobs offshore, leave crypto jobs in the United States. It's creating a significant amount of wealth. And then those people who live in the United States and honestly pay their taxes, like you're going to capture that tax revenue. So I think it's not in the United States' best interest to just put a broad sweeping crackdown on crypto like this. Because it pushes innovation outside the United States. You're going to lose out on tax revenue. You have technology that has strong incentives for the entire world to adopt it, and you're basically, you're kind of cutting yourself off from that. That's my view. Okay, so Cryptechnology just said he got his first blockchain dev job offer and interview last week. So I did see that, actually. I saw him chatting about that into the blockchain mastery program. So let us know how that went. So you said you got your first job offer. So let us know if you're going to accept, and yeah, keep us posted on all that. Somebody says, when am I going to do a video discussing ETH to 150K? So subscribe to the channel. We got that video coming out pretty soon. All right, so speaking of ETH to 150K, that's not my official price prediction, by the way. Let's check on the crypto markets. All right, so let's see here. Bitcoin. All right, so everything's in a little bit of a correction. These past couple days, Bitcoin, we crossed $50,000. For some reason, CoinGecko's getting slow. I meant to mention this in my video yesterday, our live stream yesterday, that we talked about crypto getting crazy again. One of the signs that, to me, is evident that crypto is getting crazy again. I talk about search volume on the internet, basically social media engagement, but another thing is CoinGecko. So CoinGecko's gotten slower over the past couple days, and it is also, I've seen the actual error page on CoinGecko, which I don't see very often and typically only see when the site is overloaded. I see Cloudflare like react quite a bit and like load a lot slower. And that to me is a signal that people are like, really bombing the website, checking the prices, which, yeah, it's a bullish signal overall for crypto. You could say it's a top signal and that, we're going to be in a correction from here, but I don't know. I'm leaning bullish. So let's check on the Bitcoin price here. Okay, so Bitcoin, yesterday we broke above $50,000. I mentioned in the live stream yesterday that's a really strong psychological number for people. We see people kind of FOMOing in at these levels. It's just kind of human nature. Most people buy after the price went up or after the price like hits a new all-time high. That's been kind of a prediction that like, hey, once Bitcoin breaks its all-time high, that's when the space is going to get nuts again. We're already starting to see it kind of get crazy again. I think part of this is that strong psychological number. I think part of it's seeing other major altcoins, break new all-time highs. We got Cardano, we got Solana, we got everything that's going on in the Avalanche ecosystem as well. ETH reclaiming pretty significant price levels. Stuff that people who were here earlier this year might have heard about is now like, really performing quite a bit. And so I think that's a pretty big factor as to why everything's getting so nuts right now. Of course, what's my stance on this? I'm leaning bullish. I'm leaning into a much longer cycle than I think people have anticipated. For these, sort of cookie cutter 4-year cycles. I think the composition of the crypto markets are changing quite a bit. That's the direction that I'm leading. This course is not financial advice. These are things that we think about with a certain amount of confidence level. My confidence level is shifting quite a bit in that direction, specifically because of what we saw happen here. Like if we were going to go into some sort of multi-year bear market, I don't think we'd be back up to 75, 85% of our previous all-time highs and just like chilling out here for a while. That's kind of not how the bear markets tend to work. You know what I mean? And to me, there's too much adoption happening in the space, too much stuff moving forward at just an insane accelerated pace, for this to just bleed out slowly over multiple years. Okay. NFT space is just going nuts, right? Of course, the top could be in for NFTs sometime soon, maybe not, right? Could be a temporary top. Things do feel a little bit bubblish in this space. There are certain aspects of crypto that feel a bit bubblish, but overall, stuff still looks like it's really moving forward. And the long-term thesis on this channel is the more you do with the technology, the more value you create the technology itself, that cryptocurrency assets are ultimately supply and demand-based assets. And when the cryptocurrency assets have a really strong function in those ecosystems, when you create the demand for that technology, that by nature, creates demand for crypto assets and drives the prices up, assuming that they have sound economics, which is exactly what we have on major assets like, Ether, Bitcoin, et cetera, okay? And so, that's where I'm leaning, on the current market. We could see some correction. Like I said, not financial advice. I'm not telling you to buy here. We could see a dip. But long term, I'm feeling way more confident that we're still in a long-term uptrend than we were a couple months ago. I maintained that. But like I said, you have to think about these things with a certain confidence level, and you will have a lot of people who won't, talk about that. They'll be like, I'm so sure, because that's what gets engagement, is basically just telling people I know exactly what's going to happen, but nobody knows exactly what's going to happen. And yeah, when you're down here, you start to kind of question your confidence a little bit, but after this is, has changed direction, I'm feeling a lot more confident. Okay, so let's look at, so this is actually something I just saw come up right here, and I haven't looked through this yet, but it caught my attention, so let's just look at it kind of live on stream here. This will be somewhat improvised, but I just saw this pop up. So basically, Chainalysis releases DeFi adoption index with U.S. leading the way. So the U.S. is leading the way in decentralized finance adoption, according to a new report from Chainalysis. Basically, so they created this adoption index to track which nations have demonstrated the highest grassroots adoption of DeFi protocols. So the findings indicate that adoption is moving quickly in places with high-income populations, surprise, surprise, that have taken an interest in the cryptocurrency space. So they ranked the nations in 3 categories: on-chain DeFi value received, okay, on-chain DeFi or on-chain retail DeFi value received, and on-chain number of DeFi deposits. So the first 2 are weighed to compensate for each nation's wealth per resident, so wealth per capita, to mitigate disparities between nations with wealthier and less wealthy populations. So Chainalysis ranked 154 countries with these 3 metrics: the U.S., Vietnam, Thailand, China, United Kingdom, and rounded out the first 5 slots. And so countries with the largest institutional and professional markets are driving the most DeFi adoption, according to Chainalysis. This is because DeFi remains in the realm of crypto insiders, according to research. So let's look at it here. So share of total volume by transaction size for DeFi cryptocurrency activity. So large institutional, all right, so this is spread out by quarter over the past, 12 months. So there's a lot of interesting data you can see here. So basically, if you look at large institutional participation, here it is in Q3, Q4, Q1, Q2. It's just a complete uptrend, all right? So if you were to draw this, you could look like a sort of diminishing returns, maybe like a logarithmic kind of curve, a logarithmic regression. So same thing with professional, kind of goes the opposite direction. All right, so this, I guess you can look at the chart bigger here. Okay, so large institutional kind of diminishes, and then professional kind of diminishes, and then large retail diminishes, and then small retail also diminishes. So what's really interesting here, you could draw a couple insights. Large institutions are going to be the slowest into the game because they typically are more conservative in their big decision makings. Okay, typically speaking, not all institutions, but typically, and so you can see them kind of being late to the party, so to speak. But then you can see a professional and large retail getting in really early and diminishing over time. And this is one of the greatest things about crypto is, this is an opportunity where retail investors, people like you or I, could be early to this and actually really profit from it significantly and front-run institutions. Okay, so we talk about institutional adoption of cryptocurrency and blockchain and DeFi, all this stuff, as being a major part of this reason why we're seeing this bull market, we're seeing this stuff really flourish, is because they can move the needle a lot more than retail investors, individuals like you or I, because they have a lot more money. So it only takes a handful of them to enter in the space and watch everything just absolutely explode. Whereas it takes a lot of us, because think about it. I mean, if you want to put $1 billion into crypto, you'd have to have somebody who's a billionaire, if I'm talking about retail investors, and a multi-billionaire, because they're not going to put all their net worth into crypto. So, but if you want to put $1 billion into crypto, think about a billion is $1,000 million. So think about a lot of people watch this channel. It's like their life, dream to become a millionaire, like a crypto millionaire. Well, you'd have to do that 1,000 times to become a billionaire and put $1 billion into something. So, institutions have access to $1 billion. Vast majority of retail investors have nothing close to $1 billion. So that's what it is. They can move the needle a lot more, but they've been late to the party compared to, retail here. So it's pretty cool infographic. I'll put a link in the Telegram, the live chat here, so that you can see that, and we can also just use it as a source. So if you have any questions here. Somebody says, thanks to you, I wrote my first Dapp. Yesterday, I deployed my contract in mainnet. I have a live front-end application interacting with it. Awesome. Yeah, keep us posted. You can share a link in the chat whenever you get it finished. Somebody says, do I honestly believe proof of work is finished? I mean, I think whenever we move to ETH 2.0, we turn proof of stake on for Ethereum, that it's going to be finished for Ethereum. I don't think it's going to be finished for Bitcoin, at least not for the foreseeable future. So let's see here. Somebody says a couple of TV shows watched in the past always correlate crypto with illegal activity, adding to the narrative. Compliance does not depend on clarity. Yeah, so I mean, crypto has quite a bad rap for being used for like money laundering and criminal activity. Buying illegal substances over the internet, Silk Road, all that type of stuff. Yeah, totally. Is it still used for that? Of course it is. What else is used for that? Green cash, like green U.S. dollars. So, what's a lot easier to track? A open public ledger where anybody can audit every single transaction and trace which account it went to. All right, how hard is it to track green cash? A lot harder. So I don't know. I mean, it's basically to say that the entire thing is bad because it's used in this way is really short-sighted. Especially considering everything that's amazing that we have going on that can actually improve how we do things, especially with financial-based technology. That's why it's so big on DeFi. It's one of the clearest use cases where crypto has amazing benefits and amazing use cases that can be seized and taken advantage of right now with the current state of blockchain technology. You're seeing evidence of that, people using it all the time. We can actually check on the DeFi Pulse TVL metrics. We haven't checked on these in a while. But we can see $85.76 billion have been locked into DeFi protocols. So I made a prediction in January that we would cross $100 billion, this year. So let's see if that prediction holds true. It looks like we can. I think part of what needs to happen is the asset prices need to go up. So if Ether can increase back to its all-time high in the next several months, and other assets can be correlated to increase on that, then it very likely could happen. Let's actually just pull up a calculator here. So let's just say Ether's all-time high was about $4,300. So what's the current price right now? Let's just pull it up. Okay, so let's see, 3246 divided by, let's just say it was $4,500. Might be a little high, depending on the exchange. So that's 72% of its all-time high. Okay, so if you just copy this and then say, so let's see here, 3246. So basically, if you took DeFi Pulse Index, and then you basically said, so 85 divided by, let's say, hold on, 85.76 divided by that amount. Yep. So basically, if Ether value just increased back to its all-time high and other assets that are locked into DeFi were correlated, then we would confidently cross $100 billion locked into these protocols. So many people don't withdraw any money from the protocols either. But it looks like new deposits are also increasing. So it's very, very, very likely that it will cross $100 billion in 2021. And my prediction would come true. So this is what prediction? The prediction that DeFi value locked would cross $100 billion in 2021. All right, everybody, that's all I got for today. As always, smash that like button down below for the YouTube algorithm. Subscribe to this channel if you haven't already. That really helps these videos out so that more people can learn about blockchain. And if you're as fascinated with this technology as I am, you want to get your hands dirty, how can you get started today? Well, you can go to my YouTube homepage. You can find any of my free courses there. They're like Udemy courses, but they're totally free. And if you like those and you want to take the next step, or hey, maybe you want to take a master shortcut entirely, you know, actually become a blockchain master step-by-step from start to finish over at dappuniversity.com/bootcamp. You don't have to be an expert to get started today. I've helped people with zero coding experience become real-world blockchain developers in a matter of months. So that's all I've got. And until next time, thanks.